Hello, Life Wealth family. This is Hilgard here, bringing you today's market updates. Today's topic is inflation. Changes in inflation has been one of the biggest drivers of markets in the last few years. Inflation is simply the general increase in prices for the things we buy, the food we eat, the houses we live in, and the services we use every day. To put it another way, inflation represents the cost of living, our cost of living, and it had a big spike back in 2021. We all have seen our bills go up quite a bit since the pandemic hit, so we know what that means, especially in restaurants. It's just absolutely amazing. Now, luckily, inflation started falling in 2022, but to be clear, prices didn't actually fall. They just stopped going up as fast as they did in 2021 and early 2022. The good news is that we have had stimulus money from the pandemic and a boost in incomes to help cover those rising costs and keep spending strong. To help prices from getting too high, the Federal Reserve's primary weapon of defense is rising interest rates. And after a sharp rise in the interest rates over the past couple of years due to inflation spikes, investors have gotten very excited over the decline in inflation because that means the Fed are going to start lowering interest rates. And after all, if inflation is going up, we need interest rates to go up too to curb the demand and keep the economy from getting too hot. Similarly, if inflation is falling, we need interest rates to go down to stimulate the economy. This idea has helped fuel the unexpected rally in the markets last year and postpone a probable recession. But where are we today? Inflation has stopped falling and now appears to be in a range. Since the summer of last year, it has been around 3 to 3.5%. This makes it harder for the Federal Reserve to justify cutting rates as their inflation target is 2%. Moreover, the most recent numbers came in above expectations. If this continues, there is a possibility that the Fed will hold rates higher for longer and maybe even raise rates again if the CPI starts to head back up. These potential outcomes could certainly derail the recent rally, as many have been counting on the opposite. It's definitely something we would be watching this year. Now, this can be a very complex and in-depth topic of discussion. And if you're interested in learning more, take the first step by heading to our website, www.lifewealthgroup.com/book, to request a free copy of my book, Plan to Succeed with Your Life Wealth. In it, I go over many topics surrounding the Fed, rates, market volatility, and how all of these and other factors may interact to affect your retirement. If you have any other questions, give us a call at 407-299-4129 and we can discuss your unique situation. Until then, have a great week, and it was great to be with you today.